Hey there, Nicole Chapman from Fusion Profits. In this video, you're going to be learning a little bit more about what's called your chart of accounts. This is where your organization in your books live. We'll also be going over assets, liabilities, equity, which are some foundational things with your chart of accounts. So if you're not familiar with what these things are, I've actually made a video on this topic as well. What is a liability, what is an asset, and what is equity? Check the description below to get linked to that video if you're not sure what these things are. I would start with that video first and then come back to your chart of accounts just so you have the general understanding. Enjoy the video. If you have any questions, remember to post the questions below.
All right. The training today is going to be about your chart of accounts. What is it? Why it's important? So your chart of accounts is where all of your information gets organized and is presented nice and neatly on your income statement, on your balance sheet, and your statement of cash flows. This is what makes it look nice and neat and clean. And we use numbers as a way to organize the information. Instead of it being alphabetically, it actually gives you a way to organize it in a way that flows the best way for you. For example, I had a client who wanted their chart of accounts to match the exact same way it looked and read and flowed on his Schedule C. So, there's different ways that you can make your chart of accounts look to simplify your life. The main reason I think it's important to organize it is for your own preference, so you can really look through and understand what's going on with your business and it's not just kind of a mess everywhere. There is, as everything with accounting, a general rules to follow when you use your account numbers. And I will also link this below just that way you guys have that, and I'll see if I can upload it into the training as well. So generally assets are going to start with 1,000. You can go up in increments of 5, 10, however best suits your business. 1,200 is usually your receivables, anybody who owes you money, because that's an asset. And just a side note, your assets on your balance sheet will read from the most liquid, meaning your cash bank accounts, things like that, your accounts receivable under it, to maybe if you own property. So whatever your order of liquidity is, how easy it is to get that asset and turn it into cash is the order that it goes on your balance sheet. It's just a little note for you to know and to understand when you're reviewing your financial statements. And it's also important when you're setting up your chart of accounts. Same thing with liabilities. It'll go from the shortest term to the longest term liabilities. So for example, if you have a short-term bill, maybe it's due next month, and that's a liability, that's some money that you owe, it's going to be on the top. And below, the lower you get is maybe you've got a 30-year mortgage on your business or land that you purchased or something like that. Equipment, maybe 15-year purchase on equipment, something of that nature. So again, I'm going to put this below so you don't have to remember or write this down if you don't want to, but your 1,200s are going to be your receivable. 1,300 is inventories. So inventory is also hopefully a fairly liquid asset. You want to be moving inventory. It's considered short-term. Anything that you can deplete within the year is considered a short-term asset or liability. Your prepaid expenses and other assets. So if you give somebody money, for example, say you pay for a subscription because you're going to save some money up front, and you pay a company, $1,000 or something like that for the subscription. Each month on the accrual method, you will take out one piece, 1/12 of that payment, and it will go on as an expense, but then the rest of it sits in as an asset because it's not something that you're realizing right now until you use it. So your prepaid expenses are going to be $1,400. $1,500 is property, plant, and equipment, things like that. So again, we're going down in order of liquidity. So if you have furniture, fixtures, leasehold improvements, things like that. $1,600 accumulated depreciation and amortization. We won't get too much into this, but just to know, $1,700 non-receivables, $1,800 intercompany receivables. A lot of you are most likely going to be using these, but you might. And then once you get to $1,900, it talks about other non-current assets, things like that. Then your liabilities start at 2,000s. So 1,000s are your assets, 2,000s are your liabilities, and this number is going to get put right in here in this area. And so again, accounts payable, which you're probably going to pay off first. People that you owe money, if you are a restaurant and you receive a product and you owe that money in 15 days, that's going to be on your accounts payable, and that should be something paid within the near future. Accrual payments, accrued payroll, compensation, things like that, will be $2,200. $2,300 will be other accrued expenses. So like your rent, your property taxes, warranty expense. Remember how we want to be showing things in the time that they happen. So if you have rent, or maybe the easiest way to say this is payroll, your employees work the month of January and you pay them in February. Well, that expense didn't happen in February. So you need to make sure that that's realized on your books for January, and that actually becomes a liability because you owe that money to your employees and it's considered an accrued expense. So it hits your books the right way, the way that you want to see those employee expenses, but then in the following month is actually when it's going to get paid out, and then that account clears out to zero. So that's a little quick view of what an accrued expense will be. Same thing, accrued taxes, that's $2,500. The account, $2,700. Long-term debt. Again, I'm going to have this link below. So then your revenue accounts are going to start at, oh, sorry, I missed a whole one. Equity. So think of it this way: assets 1,000, liabilities 2,000, 3,000 is your equity. So again, check out the bonus video. We're going to talk about that. Your owner's equity accounts are going to look different depending on your business. And so this is going to be a great Q&A for later on, because it is different. If you're an S Corp, it's going to be shown differently. If you're a partnership, it will be, for example, you won't have partners capital if you're a single member LLC or a sole proprietor. You'll have an owner draw. So your equities are going to be the 3,000s. And again, that'll just depend on your business. What those read at 3,900 is your retained earnings. A quick overview of retained earnings. That is just exactly as it sounds when you see it on your balance sheet. It's all of your accumulated earnings for the period of time that you have on your books. So this, again, is just a quick little overview, but please ask questions around that if you have them. 4,000s is going to be your revenue accounts. And here's where I feel like it gets very, very important to have these numbers. So for example, right here, you have other income. Let's look right now. I want to see what, it's going to let me do it. I want to see what Craig's Landscapes profit and loss looks like right now. So not too bad. They have some of the stuff actually broken out, which a lot of times it's just grouped as sales. So here is where you can actually make things that make this report reflective of your business, the services that you sell, the products that you sell, and actually give yourself a good visual representation of what's going on. So see how they have in here, landscaping services, income, and other services down here. So I'm going to go to the chart of accounts again. And so revenue was 4,000, starting at 4,000. And so you can put your revenue of your services first, starting maybe with 4,010, and say you have 3 different services that you offer. It could be 410, 415, and 420. And then you would also want to put your interest income at 46, any other income at 47. Discounts are usually put at the end, at the very bottom. So those are 4,900. Again, this is just an example, and this will be below. Your cost of goods sold. So if you have a product that you're selling, you're going to have a cost of goods sold account. Also, if you have services that you're selling, anything that's directly related with those sales is going to be cost of goods sold. So if you have, for example, if you're a web designer and you hire and you outsource specifically for a project for a customer the work to do that actual project, it would be considered a cost of service. And it's just one line item down from your revenues. And so let me see if I can show you this too, of what that looks like and why that's important. Also, if you have a restaurant, if you're selling, anytime you're selling product, you're going to want your cost of goods to be reflected in this line, because these are direct expenses to creating that revenue. Everything else is considered overhead expenses. So you can see here, your total income, Craig's total income was $98,0952. Then his cost of goods, whatever supplies it took him to directly get these services accomplished or these products sold, will be right here. And then this is your gross profit. So your gross profit is your revenues less your direct expenses to make those revenues happen. And that will bring you your gross profit. Now for services, you don't need to get too hung up on this. I do this with my clients' books just so they can see and they have it, and it's a good point of reference to see how profitable they are with a certain, a certain revenue. But if you are selling a product, this is absolutely necessary to see this. So, and say you have a restaurant or you're selling a product, what you then will want to be focused on is how much of those costs of goods sold, what is the percentage of your revenues? And you can even, when I had a restaurant, like break it down into cost of goods sold, food and beverage, food, alcohol, merchandise sales, and you break that down along with these sales categories up here. I don't want to get too far off, but where you can see them reflected. So you would have your food sales, liquor sales, merchandise sales here. And then down here, you would have your cost of goods for food, liquor, merchandise. And you can start to really pull out the reports and calculate percentages of what is actually happening there. So if you don't really have direct expenses with your cost of goods, don't stress this. Don't get too hung up on it. if you're selling a product, you definitely need to know this. You need to understand this, because this is where money goes missing. That is really hard to track in this little area if you're selling products and you're not really on top of it. And then again, everything else down here is just regular expenses, advertising, automobile, it all goes down. So after your cost of goods sold, you will have your general operating expense accounts, which are $6,000 to $700, and your base accounts, as you can see, they have them here actually: advertising, amortization expenses, auto expenses, bad debt expense. So you'll see that this will come down, and you can see by looking at your report what this looks like. So, for example, advertising is just one line item on your expenses. If you have a lot of advertising expenses, you're going to want to break it down. Automobile and fuel. See how with your sub-accounts, you have your job expenses, and then below that is your job materials. So you can break out your job materials into what they did here: decks and patios, plants and soils, sprinklers and drip systems, legal and professional services, and see how this is accountant, bookkeeper, lawyer, equipment repairs. And this, you can see how setting up your chart of accounts will affect what your reports look like. So take a look at this right now and see, and I'm going to make a couple changes so you can see what it looks like when you add the account numbers. So we're going to go back to accounting, chart of accounts. And there's this really cool edit button. You got your numbers here. Now remember, again, I'll put this below so you have it. And try not to get too hung up on all the details that I'm going to send with the chart of account. It's a very general thing. My recommendation to you is to do some research on your business and see what industry standards are for chart of accounts, because it's going to vary differently by business, what your business does. My chart of accounts for my marketing clients are very different from what my chart of accounts look like when I had my restaurant, because they're two completely separate businesses. They sell different things and they mean different things. So make sure that you look at an industry specific chart of accounts and get that. But you can start simple and build it out from there. I don't want this to be an overwhelming thing for you, but just to give you, some kind of an idea. So we'll start here. What's your checking? Your checking account is a liquid asset. Your assets start with 1,000. If this was a cash account, it would be, we'd probably call it 1,005 or 1,001, and however you want to do it. I like to go in increments of 5. So let's just call this 1,005. You have a savings account of 1,006. And then you're going to move down to your accounts receivable, because remember, your accounts receivable should be the next thing that you should be able to extract money from, and those start at 1,200. You have your inventory asset, which again, inventory should be a liquid asset. You don't want to hold too much inventory at a time, definitely not over the course of years. Prepaid expenses is, again, that's another asset. So I'll put in 1,400 here. And again, I'm going to link this in the bottom so you can pull this sheet and see kind of what I'm doing. QuickBooks is going to give you just a base account, and then you can edit it from there for you. I'm just kind of want to give you this view of what this looks like. Oh, sorry. So I would actually want this to be 10. We'll go up in increments of 5. All right, these are your assets, but right now, let's go down to your income accounts. And I'm going to show you where this gets pretty cool. So we discussed income was 4,000. So landscaping services, there were 4,000. And then it looks like underneath it, they have job materials. So this is income that they receive. So 4,005. And then these are sub accounts, so you can see. So this is your head account, which is your landscaping services. This is your highest level. And then after that is the job materials, and then the decks, patios, plants, soil, and things like this. How granular you want to get with this is completely up to you. You can also start just with a couple higher level things. You don't necessarily have to get granular like this chart of accounts is, but you can, and that's the fun of it, is you can. So this would be 4,006, 4,007, because once it gets that to that level of sub accounts, I just go up by ones. All right. And so, you know, other income we discussed, that'd be 4,700. Your pest control services is another service. So you can see how you want to go through and organize the way you want it to look. So 4,000 will be landscaping services. This is going to bring it to the very top. And let me show you, because I'm going to save this. And I'm going to show you how it reacts and how it changes your reports. And you'll get an idea of what I mean. Now, don't get discouraged by this. It can take a little while to tweak it exactly in a way that works for your business. So don't get too stressed out about this specific part, but just for you to know, this is a very easy way to organize your chart of accounts. So now see how it brought this one to the top, landscaping services, 4,000. Looks like all of them didn't save. And so there's landscaping services first, design income, discounts and income, pest control services. So say I'm going to give you another example. Discounts given, we want that to be at the bottom. We want that to be the last thing that you see. And say we want services to be right after landscaping services. So I'm going to go back to the chart of accounts. And I'm going to edit. And again, for your assets and your liabilities, these are pretty straightforward, but for your sales and your expenses, for your revenues and your expenses, this is where I think it's really great to be able to organize it in a way that works for your business. So let's see here, where's services? So we want it to be under services, under landscaping services. This is 4,000, 4,005, 6, 7, 4,008, 4,009. And then we want services. So that would be 4,010. And then maybe you want to put pest control services after that. 15. Maybe we want to put that at 430. We want to put that down a little bit further for viewing. You sell a product. Usually product income is starting with 4,600. You'll see below. Again, this isn't like it has to be this way or it's the end of the world. It's just a way to kind of generalize what that looks like. So if you're selling a product, it's 4,600. Remember, your cost of goods sold are going to start at 5,000. I meant 4,000, not 400 there. So this can give you a quick view. Refunds and allowances, remember, we want that to be at the end. So I'm going to call that 4,900, and discounts given, I'm going to call it 4,910. How about that? And so I'm going to save it now. And check out the profit and loss statement. Now see how you have landscaping services and everything's organized in the way that you want them. We didn't give labor a number, I'm realizing this, but see now services it has moved up here because it's going to go in line with the account number. And then the discounts come at the bottom, design income, then you would move up here. So you can see how it can be a little bit just trying to get it set up. If you're starting with a fresh set of books, it's really great because you can just start there and start adding. Cost of goods sold, 5,000. And so same thing for expenses. You really want to customize your expenses, especially something that you're spending a lot on. If you are a company that spends a lot on your software that you purchase to make your company run, you break that down a little bit better. You can say, this is client management software. This is, back-end software. And you can break it down in a way so when you look at it, it's not just a line item that might be a couple $1,000s a month. You can actually see what area that's going to, and that's the fun of this. This is where you can really start to understand where your money's going without having to go back in every single month and look at every single transaction. This gives you the ability to see what's going on. So I'm going to show you. There you can see, you can change it. You could change the name. So maybe I want to call it, maybe I don't like the word advertising. I do, that's what I use, and you want to say, you wanted to say advertising and promotion. You can do that here. And remember that our expenses start at 6,000, so that'd be 6,000. Automobiles be 605. And see how this is indented here? So that's going to be that sub account. It's going to break down. Bank charges. And so this is where you can start to really organize your expenses and where they go. How do you add one? Well, first, I'm going to show you here. You can edit. You can edit anything from here. And you're going to be able to choose from, is it an accounts receivable? Do you owe somebody money? Is it another current asset? Remember, current assets are something that's going to happen within the year. So your accounts, your accounts receivable is who owes you. Sorry, I looked at the accounts payable and got it. Accounts receivable is what people owe you. So they already give you that, but other current assets, if you have another asset that is not listed here as an account receivable, a bank, you can list it. So like prepaid expenses, you can click other current asset here. And this is important because it is the account type. So it is going to matter which one you choose of where it goes. So your accounts receivable, make sure that if it's an account that people owe you money, and you're creating it, there's already going to be an accounts receivable account. QuickBooks already has it set up. But if you want to add a separate one, you would need to click on this A bank, obviously bank. Detail type, you can then, and this can also sort of be a guide for you if you feel a little bit confused. So if you're like, what is another current liability? Like, I don't understand. The detail type can help guide you a bit. Oh, okay, a line of credit, insurance payable. It's not the end of the world. If you can't, don't spend too much time. If you can't find this perfect thing right here, payroll clearing account, rents and trust, sales tax payable. If you can't find exactly what it is, but it's close, it's fine. You change the name here and remember that number. If you want to add a sub account, which is an account under it that's going to break out, then you just click. So this checking account will be a sub account of maybe your savings account. And that's just to show you that would be how you would add it. Or I'm sorry, edit. Adding is similar. You can import, which also keeps things simple, depending on who you talk to. QuickBooks actually has pretty good import features. So you could completely import a chart of accounts if that is something that you want to do. So I'm going to set up, let's say, I want to set up an income account. And it's going to be another primary income account. And we're going to call it tree trimming. And I want it to be under services. Again, this is just giving you an example. You save and close. And then this is now going to be a sub account of services. And what I mean by that, again, just to quickly review, all right. So this would be your sub account, and see how it can roll up. It keeps rolling up. So if you closed out your sub accounts, all your sub accounts here, this is what your income statement would look like. It's pretty, it's like nice and short and clean. But then you can open it up to get more information. So you have your landscaping services. The total landscaping services, you earn $6,000, but what is that broken out into? You can do that with the sub accounts. So here it's job materials and labor is included in the landscaping services. So cost of goods sold, you can do the same thing. Expenses, as you can see here, automobile, you can just keep it like that, or you can create fuel. I like to personally, when it comes to travel, if you have a business where you travel, I take your travel account and I break it down into hotels and flights and entertainment meals, and just break it out in a way that you can see where your money's going and how you're spending it, but you can still look and see a total. Like this period of time for all legal and professional services, they spent $870, but they spent $640 on accounting, $55 on bookkeeping, and $100 on a lawyer, and you can see it broken out. So this in a nutshell is going to be your chart of accounts. You're going to want to go in and get this set up. I recommend, if there's accounts that you don't use, that you don't need, I would go in and make it inactive. Clear it out and clean it up. And this is what the chart of accounts, the best thing that you can do with your chart of accounts is kind of cleaning up all of your income and expenses and organizing it in a nice way. This is the end of the training for today. I'm going to link below the numbers so you can go through and look. What I recommend is doing a bit of research on your industry chart of accounts, something that works for you. This is a great question that you could ask in the group. You know, how does this chart of accounts look? Does this make sense? Things like that. Again, just get started. It's getting things started and getting things organized is the first step. You can add on to this. You can move things around to make it work. But the most important thing is get it started, get it organized, and get it looking good. And so you should have a general understanding today of how to get your statements to flow and look a certain way that works for you and your business. All right, any questions you have, let me know.
All right, you've wrapped up the chart of accounts video. How are you feeling? Tell me in the comments below. Are you excited? Are you nervous? Are you unclear about something? Let me know. Also, if you want more support and more help, please join my group, Profitable and Empowered Entrepreneurs. You can find the link in the description of this video. I'm actively in this group answering questions, and we don't just touch on the foundations like bookkeeping, but we really discuss ways to make your business more profitable and understand what is really going on with your finances. So join me there. So if you love this video, hit the like button below. Make sure you're subscribed to this channel because there's gonna be more good stuff where that came from. And we're gonna follow on to the next training video to get your QuickBooks software set up right.